Hello and welcome to another edition of our ETF Insight series, where we chat with innovative leaders from the ETF and digital assets ecosystem. Today, I am delighted to be joined by Jacob Hetzel, who is head of distribution at Scalable Capital. Welcome, Jacob. Why don't we start with you telling us about Scalable Capital and what you do there?
Yeah, absolutely. It's a pleasure to be here, to be on this format. Thank you very much for inviting me, for having me. Scalable Capital is a leading digital investment platform based in Europe, in Germany, mainly Munich and Berlin. We've also got an office in London. And what we're doing is we provide access to capital markets in various forms for investors. So that means, first of all, we've got a digital wealth management offering that is only using ETFs, only investing via ETFs into broadly diversified portfolios. But we also launched our brokerage offering for people who want to decide on their own, on their investments in the past. And this brokerage offering is also heavily used by ETF users. Half of our clients have an ETF savings plan, for example. So Scalable is very much a heavy user of ETFs in many forms.
So since you mentioned ETFs, and this is the platform for ETFs, one of the things that we highlighted at Blackwater a few months ago was the overall European ETF landscape. And Germany comes in number one in terms of ETF assets overall. And I'm curious to get your thoughts on what do you think is driving that growth?
Yeah, I mean, first of all, Germany is the largest market in Central Europe for investments. So it's quite natural that also the ETF space is growing there, as it is this global story of ETFs. And what drives the use of ETFs, I think, is, first of all, it's adopted by many types of investors. So on the one hand side, you've got all the institutional, professional clients who heavily allocate into ETFs, but also driven by the rise of the retail investor that we're seeing over here. So over the past 2 years, especially during the pandemic, more and more people over here in Germany and also in Europe, but very much also in Germany, have really decided to invest into their future, to invest into their pensions, and they use ETFs for that because it's such an easy to use instrument, broadly diversified. With one click, you can basically buy a whole allocation, a globally diversified portfolio. So this is one driver, is people really thinking about their future and wanting to invest their savings. Of course, we've got negative interest rates, we've got inflation going on, and those are very much drivers of this trend towards ETF, because also new forms of investing like robo-advice or neo-brokerage have made access to ETFs a lot easier over the past years, and this is also, I think, why digital providers like Scalable Capital are drivers of that growth of ETFs over here in Germany.
Yeah, that's really interesting. And I think that retail space, because overall in Europe, it is not the biggest investor base. I think that growth is very interesting. And, you answered partially part of my next question, but do you see the retail investors in Germany kind of going in the same route as we see in the US, where there's more and more self-directed investors? And also, do you have any predictions for 2022 for the retail ETF space, ETF user?
I mean, predictions are always hard, especially when they're concerned with the future. But joking aside, I think this will continue. So the adoption of ETFs also compared to other financial instruments. So in Germany, especially in the past, we've seen a lot of mutual funds, but those have very high fees, and people are getting more and more cost sensitive. This is also an argument pro ETF, and this provided transparency that we see will also help to get this trend to be here for the long run. So especially if we see that we had a rise of the retail investor in the past already, like 20 years ago during the dot-com boom, we also had many investors in Germany, but those people left the capital markets after the crash because they invested in single stocks. They weren't diversified. So many people lost a lot of money. This won't happen with ETFs. They will have their ups and downs. Volatility is also part of the game, so to speak. And we've seen this year, especially the rise of volatility and shakiness in the markets. But I'd say with the broadly diversified product like the ETF, the trend is really here to stay. And we see that especially during when we look at savings plans, because here people can't leave that easily. I mean, you have to cancel the plan, and the idea is to really get going and invest over time every month. And this is a product, this is something that more and more people use, and this will help the growth to stay for ETFs. So my prediction is a positive one. Even with shakier markets, as we've been seeing them in the early days of this year, we will see a greater role option of ETFs all over Germany.
Well, there you have it. Thank you so much, Jacob. I really appreciate your insights. It's very interesting. And for those of you who are watching, if you'd like to watch more videos like this, you can go to our website, which is blackwatersearch.com. Thank you for watching.